Nvidia France are also now becoming larger Nvidia companies. The story just continues to blow us all away. Michael Lee, strategy founder. Michael Lee, I'm pleased to say, joins us now. Is this growth sustainable?
Yeah. So what you're seeing is exponential growth, not linear growth. All right. And when the analysts and the spreadsheet and the number crunchers look at something, it's very hard to predict that unless you can get your arms around the technology. And if you think about it like this, to get to 60% adoption, the internet took 15 years. Okay. The smartphone took 10 years, and AI is on a chart for about 5 years. So that technological spend and upgrade is on a chart that looks like a hockey stick, not just a straight line that moves in an upward direction. So I don't know that they're going to continue to grow 38% quarter over quarter, but for 30, 40% year over year growth for the next few years is definitely sustainable, and they'll probably end up beating it.
So, Mike, I'm looking at how Wall Street's reacting today, and they're loving it. They're cheering. They're buying. But you're saying that Wall Street's underestimating the corporate investment cycle in AI, which means you think Wall Street doesn't even get it yet. Are you saying that this is still an underpriced stock, even at these levels?
Brian, yes. So when you look, great question, by the way, and if you look at the stock and you bring it up on Yahoo Finance or Google or anywhere else you look, it's going to say the price to earnings multiple is 100. That's just not true. This year, they're going to earn between 50 and 60 billion, and next year, I'm guessing between 70 and 80 billion, which means they're trading at about 25 times next year's earnings. Okay, for the stock, that is the linchpin in the largest global technological investment cycle upgrade we have ever seen, trading at 25 times next year's earnings, is not that expensive. And at some point, this growth rate will level out, and the analysts will be right. I just think that's 3 or 4 years from now, not 6 to 12 months from now.
Mike, there are going to be people who are going to say that this is just not sustainable with respect to the larger rally, that Nvidia cannot hold this whole market up, and neither can AI. There may be bumps in the road ahead. We got Fed minutes yesterday indicating that most of the Fed members are worried about a risk of cutting too soon. Some people are saying if things get worse, maybe this is a Fed that has to hike rates. These are some of the risks out there to this rally. What do you think?
Yeah, so I'd say the chances of hiking rates are 0. I could see a scenario where we get no cuts this year, maybe only 1 or 2 because it's an election year and Jerome Powell doesn't want to get fired in the middle of the year. But look, what you have, it's the story of the Magnificent Seven is not of a booming economy. It's of companies like Netflix becoming your new defensives. Okay, something that people cannot do without. And this AI investment cycle is very, very concentrated between Microsoft, Amazon, Google, Nvidia. Okay, it's a very few small players that are benefiting dramatically. So when you have the Magnificent Seven up 50% or so, and the S&P 493 basically flat, that says to me a lackluster economy, just a trend that's going on that very few are benefiting from, and I think that trend continues.
Thank you, Mike. Really appreciate it, that widespread analysis. Thank you.
Yeah, that was great stuff.
Okay, awesome.
All right, meantime,